Hello everyone, welcome back to my channel. So this video marks the end of the week number 76 in this road to 100k realized return challenge. Before we get down to the actual content of this video, I just want to let you know that for some reason, probably due to maintenance in the platform, I could not post this video yesterday. I could not record it anyway yesterday, and so that is why I decided to post another video, which I think is important, very important instead. And now that's why this video is coming up a bit later, in this case on Sunday. But with this out of the way, when it comes to this past week, it was a positive week overall. The most of the stock indexes went up, and especially the IWM, which ended up posting a quite impressive gain for just 1 week. And here is the picture of his chart over 1 week, and but mainly because of yeah the key developments that occurred over this past week. Now looking here and looking at the beginning of the week, yeah, there was this ISM manufacturing index, which was slightly disappointing, but it was not much of a market mover. The services also came a bit below expectations, but not that bad, not that catastrophic. There was also some Fed member appearances, but there was nothing also to talk about this, and also some Fed speak as well, but yeah, nothing to be concerned about. One of the main points of the week was this ADP employment, and this one, yeah, even though, as you can see, this is private sector, there was some growth in jobs created, but again, in comparison with what or relative or akin to what has happened in the past few months, this has been a little bit disappointing or a little bit below expectations, and most of these jobs were, and you can see this in the news piece in here, was mostly in the healthcare service and education, and also on very small companies. So whether this actual increase in payroll is very significant to the economy, I would say not so much, given the fact that these new jobs in education and health related fields are not very significant when it comes to the actual output of the economy. But yeah, it's still better than nothing. However, the other point is that when it comes to the actual, and looking at here, let's skip Thursday for a moment. When it comes to the actual employment report, here 50,000 jobs were created, which was a little bit lighter than expected, but still, I think the main point here is that the October and November readings combined, and this is also in the news piece in here, they were revised downwards and were revised by a combined estimate of 76,000. And because of that, you can see that the actual performance of the job market has been underwhelming, to say the least. And this situation gives a picture of the first estimates are not being that accurate, and so there are a lot of revisions that need to be done once the data is released and at some point after. And so this is something that we need to keep in mind. But yeah, this is not ideal, even though the unemployment rate fell by 0.1 percentage point from 4.5 to 4.4. And also here, a bit of a positive note, the jobless claims, initial jobless claims were slightly less than expected, which is also a good. Also the trade deficit, but even though this is not much of a market mover, the trade deficit came down by a quite significant margin, which is of course good. Probably because of the effect of front running the tariffs, a lot of the imports came down, and so that alleviated the deficit. This US productivity was also quite good. It came in line with expectations, which is good. But again, this was the picture that came across over this week. Again, this is a bit of a so-so kind of data, but markets were still buoyed by the fact that the economy, if not ideally, but it's still going along in somewhat reasonable shape, and that is also probably the one of the main reasons why, as you can also see here, for the next Fed meeting on January 26th, there is almost certainty that the Fed will keep interest rates unchanged for this next meeting. And so, yeah, as things stand at the moment, unless something really happens next week with the CPI, with the inflation report, this should be a done deal, even though we are a little bit more than 2 weeks away from it. Now, with this out of the way, going to the actual trades that we did, first of all, we managed to get 538, a little bit more than $538 over this week, but we also collected a $200 capital gain. And why is that? Because these shares of IWM that we bought the week before, because this put was assigned, we bought these shares at 250, and now we managed to sell them at 251. And so because these were two contracts, so 200 shares, $1 a piece more, so we collected a 200, we picked up a $200 capital gain, which is basically mentioned in here. We sold at 251, so we collected $200 on top of this. Now, these trades we have already spoken about this week in the video in which we started the week. Even though this stock, the IWM ended the day, this particular day, around 252, and that's why our calls were assigned. But still, yeah, we could not predict what the markets are going to do, and as you can see here, it was a little bit above 252, but then it came a run up which went all the way throughout the week until over 260. So yeah, we left some money on the table, but given the fact that we were already, when it was at 251, 252, we were already close to all-time highs for the IWM. Yeah, this outcome was not expected at all by me, and so yeah, we could have sold at a higher. We sold the calls at a higher strike price, but yeah, with 2020 hindsight, it's easy to make all the predictions. Now, again, and coming back to the trades that we did, we did not do much more than this. As you can see, we did very few trades. Again, we still managed to sell a put with 251 on the next day, and actually two puts on IWM. But as you can see also here, about 4 hours later in the trading session, we simply bought those back because they were already worthless. The price continued to go up, so these puts lost all their value very quickly. And also because at the time the price was already extremely close to its all-time highs at the time, which was around 253 or 254. This is not the screen that I want to show. Yeah, so this is it. And again, because at this time it was already going very, very close to 255 to 56, which was the previous all-time highs, I decided, all right, let's not bet on IWM anymore, and we decided to use all as much money as we could, as much buying power as we could. That's why we also bought back this ARKK at 7 cents, even though we sold at 16 cents the day before. We still managed to get about 16% return on this, which is good. Taking into account it's just a 1 day trade, but it encompassed 2 trading sessions, of course. But we then decided to buy back this IRKK, and we sold 3 puts on Nvidia. We received 61 cents each, so we received a grand total of 183. And with the remaining funds that we had, I went to search for an ETF that would fit into our buying power, and we used the XLA, which is the ETF on energy stocks. We sold 1 put. We still remained with the same buying power left available as we had on ARKK. Once we had the IWM and ARKK put sold, but still it was basically a rollover into other positions to get much more premium out of this. Now, nothing happened on Wednesday. We didn't do anything. As I mentioned, it was my plan to sell or to buy back the calls on the queues the day before, or before they expired, so that we could roll over the position to catch up on to catch the volatility about the employment report on Friday. But at this point in time, the market went quite a long way against us. Let's see, where are the queues? So the queues are here. And as you can see, yeah, this was an extremely, extremely volatile week. And if we manage to buy back the calls around here, it would be much better for us. But because at the time, this was not really on the cards, this was really, really unexpected, I decided, all right, the calls we sold expiring at the end of Thursday still have quite some value. Of course, not nearly as much as the calls expiring on Friday, but they still have some value. Let's wait a little bit more, take a little bit more of the theta decay, and then we buy back. And my plan was to buy back on Thursday, which we had to do it anyway. But because the market went down by so much, yeah, we bought back the shares, the calls at almost nothing, so basically at 2 cents a piece. But because of it was already so low, the price, we also received a very, very small premium for roll over the position to Friday. You see here, we only collected 18 cents for a call which would expire on the next business day. So it was a very, very meager return here. And here it is. It was very small. This is getting a huge headwind into our portfolio. So we really want to get rid of this position as soon as possible. But then again, we did not do anything for Friday. We just let these positions expiring without any value. The puts on XLA, the puts on Nvidia, and the calls on the Qs. I briefly considered for the Qs to buy the calls back at 1 cent. And why is that? So that we could roll over a position for the entire next week, because the premiums were very, very appealing. You see, this this call which would expire the next Friday, which and that would encompass the CPI or the inflation report on Tuesday, also the PPI on Wednesday, and that's pretty much it. That's the most important thing. Probably there will be some earnings on the way as well, but I haven't seen it yet. But yeah, there's a very good premium for just 1 week. But I decided, all right, the only advantage we get by rollover on Friday is because we capture some theta from the passing of the time during the weekend. But because we are relatively close to the 630 in terms of between the share price and the strike we want, which is 630, the delta is already significant again, is already sizable, even though should be around 0.3, 0.4, because it's relatively close, but still out of the money. And so if the market, as it usually is the case, in pre-trading goes up again, it doesn't even need to go up by a large margin for the waiting to sell the calls on Monday to compensate. So a small nudge up in price before the trading opens will offset, will be will increase the premiums by more, the call premiums by more than the loss of premiums due to the passage of time over the weekend. So that is what I'm banking on. That's why I decided not to roll over, and we basically don't pay commissions to close a position and pay 1 cent per share to close the call position. And so I decided to let the options expire, hoping that even if it opens up by just a little, like 627 and a half, something like that, I think it should be enough so that we can offset the loss of value for having gone through the weekend, and we can sell those calls at a higher premium, because we really need to catch up on this. This position has been underperforming for a long time. Depending on what the market does, and because the position would be for the entire week to capture all that premium, I will probably sell calls with a strike higher than 630, 631, probably even 632, because even if we sell a 632, of course, these are values which are no longer applicable because the market is closed, but still, if you account for the probability of profit, it still goes up by a very tiny margin, just 4 percentage points from two strikes down. And this is something that it's good for us, because in this case we would like to have a lower probability of profit, because we really want to sell these shares, because we need to adopt probably a different strategy in terms of our allocation of our buying power among the possibilities we have available, the Qs, IWM, and other possibilities we have. So it's important that we sell these shares as soon as possible, so that then we can do something that will allow us not to spend so much time with the underperforming position, because as you can see, all these calls that we sold on the Qs, the return has been very low, and this is clearly not optimal. Another one which is rather low, this one was also rather low, and so you see here, this position, which is so big in our portfolio, has been a huge headwind, and we don't want that. That's the reason why in the past few weeks we have been getting so little premium, and we could have gone already. We would have been, if this did not happen, if another allocation of options, if we have done a different allocation of options, we would be much further ahead in this challenge, and I want to make sure that this situation does not happen again. Now, for next week, as I mentioned, it's going to be a big week because of the inflation report. I'm not sure if there's going to be any earnings. I haven't seen it yet. Earnings from big companies. We can have a look here. So next week. So HTFC. So nothing really remarkable. So this is for January 17th. Oh wait. So January 12th. So Monday. Sci-Fi Technologies. Delta. JP Morgan. This can be important because this is a big bank. um, Bank of America, Wells Fargo. Oh, so all the this would be the week of the financials releasing their earnings apparently. BlackRock, TSM, important one, Goldman, Morgan Stanley. So yeah, this can cause some shifts in the market, which is something that we always want because more volatility means more premiums, even though these stocks will not affect directly the 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 ETFs that we invest on, which is usually the Qs and IWM. And yes, so this is basically the week of financials. Next, the week, the following week should be something to should be also there should be also more important companies here in the pipeline, but we'll see. I also failed to mention here Citigroup, which is also another one. But that is probably one of the reasons why there is also some additional volatility embedded in the premiums, but we'll see. For the time being, yeah, this is all. Um, Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And of course, feel free to like the video and subscribe to the channel. We will reconvene either Monday evening or on Tuesday morning to start the week number 77. And I just want to make one final remark. The video that I posted yesterday is a bit long. I put some timestamps to make it easier to digest all the information. But again, I ask all the viewers if they have any questions, please reach out to me. I'll be glad to discuss those and make these things as clear as possible for you, because at the end of the day, we are all learning about this together. We are growing together on this, and it's important that everyone fully understands all the minute details about using data releases to basically create your option setups and profit as much as you can. So yeah, that's it. And yeah, I'll see you up next time.